So good evening, everyone. It's always good to be back, and I just want to welcome you to an all-new season of the Men's Lounge. We had a little break, and we are back with a lot of goodies. And so, the previous season we spoke about a lot of interesting topics. Some of them were erectile dysfunction, fatherhood. Um, Paternity fraud, all those kind of things. And this time around, we are back. And it will interest you to know the kind of topics that we are going to have for you this season. It's an all-new season, which is season 4 of the Men's Lounge. I will not take much time. There's a lot of updates I need to give you. Going into an election season, there's a lot. Already, ETV is also a hub for this election. There'll be a lot of news that you'll be giving. Another thing I need to remind you also is the fact that we are in a digital era, and a lot of things will be happening digitally as well. Let me not take too much time. We have a lot to discuss. I'm going to go on my first break. When I'm back, we shoot straight to the discussions. Please stay tuned. Come back. If you're just joining us, like I said much earlier, you're just being welcome to the all-new season of the Men's Lounge. I'm sure you've noticed a few changes here and there. Yeah, Men's Lounge, we are moving on. You know what I mean? A lot of guys are coming to the bar for us to be sipping some few, Let me not take you there yet. And so, like I mentioned earlier before we left, digitization now has become something that, everybody looks up to. We are always on our phones. There's webinar seminars and all that. Even events are being done digitally. I'll be taking you through something beautiful that we have. And so life has taken a new curve, and digitization has become an integral part of how we do things. Global Media Alliance presents the webinar series dubbed The New Normal, Unlocking Digital Transformation in the Retail Industry. So you see, it used to be only phone calls, data and stuff, but now we are even taking that into the retail industry. Be part of the conversation with Joseph Paddy, PRO Guta, Dennis Asari, General Manager, Accra Mall, and then Bennett Otu, PR and Communications Manager for Jumia. You know Jumia, where you go online and then you buy stuff and it's delivered to you. Yeah. And so this is going to be on Tuesday, 25th of August, 2020 at 10 a.m. in the morning. So 10 a.m. sharp, join the webinar, and then you're going to get a lot of information. So the webinar will be held via Zoom and also broadcast live on ETV Ghana. Register now on www.gmaworld.com, or for some details, you can call 020-2222-096, 020-222-096. Today we are talking insurance. And when you look around, there are several insurance companies. For me, I didn't really want to look at the companies, but I looked out for the people who can give us the information. After looking around for so long, I chanced on Hollard. I'm sure Hollard rings a bell. So I'll give you a little that I know about Hollard. It used to be Metropolitan. If you remember MetLife or Metropolitan, Met Insurance, Met. So it's they bought new clothes, they rebranded, and then maybe I should be asking them to tell us what exactly the new meaning Hollard. Maybe it's happy, old something. I don't know. Maybe they have some meanings. I'll ask them to be telling us. So today I have in the studio with me Emmanuel Akwada. Now the spelling made me feel like Akwada. You treat Akwada like a kid. But I look at the guy, he's old. So Emmanuel Akwada. Emmanuel Akwada happens to be the head of distribution. Okay. And then here too I have Gustav Adolf Bruce. He's Ghanaian, no? The name Gustav there. Adolf and the Bruce. He must be a fancy. He should be telling us. And so Gustav Adolf Bruce is also the manager business development for Hollard Insurance. Both men are from Hollard. But the thing is, one is from Hollard something, and the other is Hollard another thing. Guys, Akwaba.
Yeah, yeah.
So this is Emmanuel Akwada. Look at him. On Akwada, that's the name. And then Gustav.
Yeah.
Gustav is in a while. Yeah. We've been talking since 2012.
It's amazing we've been talking all this while.
We never met.
Yeah, we never
finally
met.
Crossing the road, you find a lounge across the street and you enter.
You see?
I can only serve you some little alomo.
And I come here and you tell me I settled your claim.
Well, you did settle my claim. Wow. I haven't forgotten. It was such a terrible incident. It was a terrible accident actually in 2012 when I had my car crashed to. Look, it was crashed to pulp, and was written off, and I was sorted in no time. It's something I know. It's become history. It becomes a story that I will tell anywhere I go. I never forget it.
Thank you.
If I've met you today, all I can say is thank you.
Thank you too. Thank you too. That is what Hollard is all about. Settlement of claims.
Settlement of claims.
Yes.
Most importantly, we thank God you are alive.
Yes.
Oh, of course.
Yes.
It was it
Yes,
was it was
yes,
it was it
yes,
was a
yes.
very terrible time. One day I'm sure I'll tell the story. Yeah.
But we'll
Anyway,
keep the-
guys, welcome to the studio.
Thank you very much.
Good to see
Thank
you.
Thank you.
After so many years, I've seen Gustav and then Mr. Kwada.
Yes, sir.
You know, when I started, I spoke about the name Hollard. You know, a couple of years ago, I know it was Metropolitan
Metropolitan, yeah.
Insurance. And then I used to come there a lot. I remember Mr. Addison, I think Kojo Addison also. And,
Kwabena.
Kwabena Addison, yes, at the time. That tells you it was about 2009 or 10 or something
Yeah.
like that.
Yeah, that's
You know, I've been with you guys for long. Anyway, and so it changed from Met to Hollard.
Yeah.
Was it just a rebranding? What was it?
Okay. So in 2015, Hollard SA, South Africa, saw potential in Metropolitan Insurance Company and decided to buy shares in Hollard. They eventually bought majority shares, and then they had to change the name from Metropolitan Insurance Company
Okay.
to Hollard,
Okay.
to Hollard Insurance.
Obviously, more money coming in to pay the claims. Eh?
Absolutely. And
That's
they
good
brought
to
the
know.
international flair, money, and exposure to make Hollard a bigger insurance company in Ghana. And as a result of that, we are better placed to underwrite a lot of policies and deliver the best insurance to the Ghanaian people.
That's very welcoming to know. I mean, I have seen your brands almost everywhere. It's when it was Met, it was all over. And when it became Hollard, especially your color is very attractive. And so from afar, I see it, I'm like, oh, wow, Hollard, and it's working. But the thing I put between the two of you, I mean, I know there's quite a difference. I know Gustav is coming from the general, that's obviously the motor insurance and all that, isn't it? And then you are coming from the life.
The life, yeah.
Mona Mukun Crawford. And you, Mona, which one is it? I need to know, you know?
No. We rather pray for people not to die.
Or you pray for people not to die.
Exactly.
So that you keep the money.
Exactly.
I have some matter here. I'll share before we close. So let's start all over. So for starters, we need to try and understand what insurance really. I mean, to those who may not know what insurance is,
Yeah.
how would you explain insurance to starters? Anybody?
Okay, so good evening to your viewers, and thanks for the opportunity. But when it comes to insurance, as we go to and fro in life, we normally are faced with a lot of risk, and things come our way which we haven't planned for. And in as much as some good things come our way, so is it that some bad things also come our way. And when those things happen, they make us financially worse off. Now, what insurance is seeking to do basically is to say that because in the system we live in and in the world that we find ourselves in, there is this potential of you being affected in a negative way when it comes to your finances. Get yourself some protection such that in case it does happen that you are adversely affected financially, the insurance companies will come in to restore you back to where you were before you were affected adversely. So if I want to bring it to the layman's terms, I mean, you cited an example of your vehicle that you crashed in 2012. I don't know how long it took you to get money to buy the vehicle. But the moment that vehicle got crashed, it means your financial position has worsened.
Yeah.
But for insurance, you will need to still raise some money through some other means to be able to restore that vehicle. But once you had insurance, insurance just brought you back to where you were just before the accident occurred. So basically, that is what insurance is supposed to do. Just bring you back to where you were before you became financially worse off.
Gustav, I mean, with this explanation and the fact that you sit in the very general part of insurance, is it the same, or there are some other kind of definition that you can add to make it more understandable?
I mean, basically, insurance is a risk transfer mechanism where, like he rightly said, we live in a world. The fact that you live in this world, you are exposed to various risks and perils, and as a result of that, you need to take insurance. You need to protect yourself financially, because whatever you do, you spend money. You buy a house, you buy a vehicle, you pay transport fare, whatever you do, there's some financial commitment. And it is that protection of your financial investment in whatever that you need to protect. So we say that everybody should try as much as possible. Insurance is not something that you should gloss over. You should always protect your valuable assets. You really need to do that. And insurance makes, general insurance, what general insurance really means is that we protect all assets or all our possessions which are not life.
Okay.
You get me? That's
Okay.
what general insurance basically means.
So then, for a layman, I probably can say that it provides a certain kind of restart support. I mean, in case of any unplanned incidents.
Exactly. So
Absolutely.
you realize I used the word it restores you.
Yeah.
So you were at point A, something negative happened that moved you to point B. What insurance is seeking to do is to bring you back to point A.
Almost point A or point A.
No, point A.
Hey.
In fact, we'll bring you back to point A. So we restore you back to where you were before the event happened that took you to point B.
Interesting.
Yeah.
Interesting. So do we? Yes.
To add to that,
Yeah.
one thing that insurance does is that when you buy insurance, you are transferring your risk to a professional risk taker, somebody who says that I have what it takes to sort you out when you are in trouble. So once you buy insurance, the insurance company has a duty to restore you. We say indemnify, take
Yeah.
you back where you were
Okay.
before the accident. Apart from that, what insurance also does is it gives you peace of mind. You can sleep well when
Yeah.
you lie on your bed.
Okay.
Secondly, you can say you have all the money in the world, but at the end of the day, when you have insurance and the unfortunate happens, the insurance company, because of its expertise, can better negotiate and better place you back where you were. You could have all the money. I'll give you a practical example. There was this nurse who had an accident with her insured, and then because she had the funds, she went ahead and paid for the repair of the vehicle.
Okay.
She approached her insurers, and basically the insurers paid her much less than what she had paid the repairer. And the reason the insurance company told her was that the parts that were used for the repair of a vehicle could be gotten cheaper at a particular dealership.
Okay. But does that matter?
Yes, sorry?
Does that matter? I mean, if somebody could get a pass from a particular dealership and the person doesn't and chooses where to go to, how does that affect the insurance?
claim.
The claim.
Okay. Basically, what it means is that you are spending unnecessarily.
Okay.
You are spending much more than you should spend. And that is why insurance is important. Because we have the expertise and we are a big entity, we have partnerships with these dealerships, and we can get parts at a cheaper cost. You get me?
Yeah.
So invariably, that is another reason why we need to take insurance.
So let me find out this. Insurance. Are there types? Or all is just one insurance and that's the end? Are there types of insurance that we have?
There are many.
There are many.
In fact, there are many. Let me start by saying, if you want to break down insurance, you can categorize them into three main fronts.
Okay.
Okay, so you have what we call the general business insurance, where Gustav is coming from, largely dealing with property and some other issues. We'll go into it and we'll give some examples. Then you have the life insurance bit, which largely focuses on human life and other issues, which would also go into detail.
Yeah.
And then we have the health insurance aspect.
Okay.
So there are three broad fronts when it comes to insurance. But if you go into each area, then we start diving into it, and we can further break it down into much, much smaller bits. That is when you will come to know the different types of policies that comes under a particular wing.
Okay.
So you cannot, that is why in Ghana, for example, you realize that the regulator for insurance, we have a regulator that deals with general insurance and life insurance, and we have a separate regulator that deals with the health insurances. So if you're a company, just because you've set up an insurance company does not mean you can decide to operate all forms of insurance.
No.
You need to have the licenses to be able to operate
Okay.
in each of the areas.
Okay.
So Hollard, for example, we have a license for general business, we have a license for life, we don't have license for health.
Okay.
So we are not operating, but in the near future we'll venture into that area as well. So there are different types of insurances.
Okay, so let me bring you to something that I read a couple of weeks ago. I think I read it in the news or some article somewhere about how the insurance companies are going to be regulated. I mean, going forward. The fact that, and I experienced it, you know, I tried to insure a vehicle and I couldn't get the usual discount, and I'm like, what's going on here? And I was told that, oh, things have changed, and I feel it's affecting you guys. Are you still getting business, considering the fact that now you have to charge almost the real values? I call it real values, because really those are the real values. Now that you are being forced to charge those, is it not hurting the business?
Okay, so basically, no.
It's not.
It is not hurting the business.
Still Scaneba.
Sikaneba.
It's okay. Say Scaneba there.
No, Sikaneba.
I was worried about you guys.
Sikaneba, because at the end of the day, you know, when we have a level playing field where all our competitors are charging the same premium, it only boils down to service.
Okay.
You get me? Once you are charging
so then it means it favors us then?
It rather favors the customer.
It favors the customer.
Oh, then it's good. It's good.
It
Then
rather
it should
favors
go ahead.
the customer
when it comes to claims payment and payment of injury claims.
Okay.
Exactly.
You get me?
I see.
Yeah.
You see, that document that we have to sign when I have to come for an insurance, and then even after paying, that plenty print, when I read it, I see a lot of
policy
things.
document.
Thank you. So I see jargons like premium, sum insured, payouts, deductibles, allied perils.
Okay.
It's MBBRE. But you see, the moment I see the amount, I just go down the signature, fine, and I'm gone.
You are gone.
Knowing that I didn't read it.
Yeah.
It's because I don't understand those, you know, what are the premium?
Okay.
I please just take me through those few, especially those ones I always see. I see premium, I see deductibles. I normally will see is it peril? Yeah. What is it? Let's start with the premium. What is the premium? What's the premium?
Okay, so when you hear the word premium, it simply refers to what the insurance company is requiring you to contribute in order to receive the protection or the promise that they are giving to you. So you see, insurance is a pool of contributors. We all acknowledge the fact that a particular risk is facing us. If I am a car owner, when I drive on the road, there's the likelihood that I could get myself involved in an accident.
Yeah.
That risk is carried by every car owner.
Okay.
So all car owners, we belong to a particular pool. So when we talk of premium, we are saying that, look, an accident can occur to each and any of us.
Yeah.
Okay. So we want to come together, contribute something into a big pool, so that when it happens to one person, we pick money from the pool and then go and support the person.
Okay.
Definitely, it cannot happen to all of us at the same time. It will happen to some unfortunate few ones. So the contribution that we require of you to be able to build the pool and support ourselves in case some people get affected, that is what we are calling the premium.
Oh, okay.
But we can't charge the same premium because you may be coming into the pool with a Land Cruiser. I may be coming into the pool with a Corolla. The Corolla is less expensive than the Land Cruiser.
Yeah.
So if unfortunately you are coming with a Land Cruiser and you get an accident and we have to fix a Land Cruiser, we'll definitely spend more in fixing the Land Cruiser.
Yeah.
So for equity's sake, we will say that you who is coming with the Land Cruiser, pay something higher than me who is coming with a Corolla.
Okay.
So basically, it's the contribution you are required to contribute into the pool. If you bring it to the area of life insurance, for example, if an elderly person is joining a pool of contributors based on the fact that we anticipate that someday we will die, and when we die, we leave behind responsibilities that must be taken care of. So we want to join the pool so that in case we die, there will be some support to our beneficiaries. If you are an older person, you should pay more than a younger person because all things being equal, the older person will visit the ancestors first.
That is where I have the problem. You see, so hold on, Gustav.
Yeah.
This one I'll save you. But Iba,
Yeah.
are you telling me that you have found the key to death so much that you are aware that it's only the older people who are like, because if you are charging higher for older people and the young ones are dying, what's the point?
No, so I said something. I said all things being equal. You see, if life should be fair, life unfortunately is not fair.
So
but God is good.
So you're also not being fair.
No,
then?
but no, we are being fair. If life should be fair, then the person who brought me into this life must take the lead out of this life before I follow. That is the simple analogy I'm saying. So let's say that God has said that we should all hit 100 and exit. If you are 72 and I am 44, you at 72, you would exit first before I follow.
Hopefully.
Now, because you would exit first, it means that the likelihood of we contributing to support your family would come quicker than me who is a 44. If the benchmark is that we all exit at 100. So if you are 72, you'll be told to contribute more to the pool than me who is a 44. That brings equity. So that is what the whole premium idea is about. Contribute something to the pool because we all face a common risk. When something happens, we come and support the one who is affected. But in contributing, we look at how much risk you are bringing to the pool to determine how much you should contribute.
Okay. So just to add to that, when it comes to general insurance, I want to use, let's say, an example in fire insurance. Let's say you've built in a valley, and I have built on high grounds, and we go for insurance. Do you think it will be fair for the one who has built in the valley, who is exposed to flooding, to pay less than the one who has built on a higher ground and will hardly make broken wall or broken building claim?
I think it's fair. I think it's fair to charge low. And ask me why. Of course, to pay less.
For the one in the valley. Why?
Value of building the same.
It still doesn't matter. There could be some earthquake rather than flood, which will affect the one up there.
No, he was specific.
I was specific. I know what you're talking about. But even when there's an earthquake,
it still comes back to that one. But you see, there's this analogy I rather thought that so. Using the explanation that you gave, a 44-year-old and possibly a 72, there's a cap of, let's say, 15,000 as the sum to be collected. My understanding, see, from a lame person who knows nothing, I thought, I may be even right, so I thought it rather meant that if I'm contributing towards a 44-year-old, I'm likely to have more time to get to a certain, maybe expecting that the person lives at 100. And I'm contributing to get 15,000 in the end. So then my assumption is that from 44 to 100, I have more time to contribute to a 15,000. From 72 to 100, I have shorter time to contribute that same 15,000. So then I use that analogy to try and understand the explanation, which then makes me understand it better. Which means that, because from a 72-year-old, I need to pay more.
No, you see, but that is not it. Unfortunately, that's not it. We'll come back to the jargons again, but let me just throw more light on this. Life insurance, when it comes to the example you gave, the sum assured, it is not savings you are running. If it is savings, then you can say that because you have a shorter time, then you need to contribute more in order to reach that 15,000 that me, a 44 person, or somebody who is a 32 is also aiming at. So we're talking about a policy where your contribution on a monthly basis is giving you the chance to assess the 15,000. So irrespective of when you depart. That is why you could make 2 contributions or 6 contributions and then therefore cares, and you still will get the 15,000 for your beneficiaries. And somebody too would have contributed 15 years, 20 years, and the person is still not dying, still aiming towards that 15,000. So we are saying that it's a risk that faces us. We don't know when it will happen, but for so long as you are in the pool and you are contributing your quota in the pool, if anything happens to you, the insurance company will live up to its promise of taking care of the promise we have made to you. So it is not savings. Normally people see it from the angle you are seeing it, that it is savings.
I mean, I've met a lot of people who have tried to explain in that, and I'm like, you confuse me even the more.
Exactly. So if somebody picks a funeral policy, you will hear people say a thing like, it me 5 years, and me beji me also on farm mommy. The contract you had with the company, The contract said that every month pay me 50 Ghana cedis. In case you lose your father, I will pay you 10,000. That's the contract.
Yeah.
So long as that father is alive, the contract has not crystallized for payment.
Okay.
So the only way you will earn the 10,000 is when that father decides to say goodbye.
Okay.
So if the next 30 years your father is still safe and sound, that contract has not crystallized yet. But somebody could also join the pool today,
Yeah.
pay 3 months, 4 months, and lose that same father through an accident. And then the person will come and take the 10,000. And you will be in the pool having paid 10 years and still your father is around. You will not say that because of your claim, your father should die. But we are saying that someday the father will go.
Yeah.
We just don't know when he will go. So just take some security so that in case he goes, you are not taken aback and you don't suffer in your finances. So
Well,
that is what it is.
that's a much clearer explanation,
Yeah.
and I appreciate it so much. I'm sure the viewers also appreciate it. And so I'm going to go on the next break. When we are back, we'll continue. But when we are back, we'll talk about, I want to understand what the life insurance really means for
Okay.
the family and the health. You know,
Okay.
I want to understand what that means
Okay.
when we are back.
That's
so
fine.
please stay tuned. All right, welcome back. If you're just joining us, we are in the men's lounge and we are talking insurance. I'm here with Emmanuel and then Gustav, handsome gentlemen giving us a lot of information. And so before I left, I did say that I would want you to explain a bit more what's life, the life insurance cover for the family, the health. But before that, Gustav, I have something here and I think that comes to you clearly. Before we left, I was talking about the jargons. And I have this coming from a viewer, and that says, why are the terms in the policy document not stated in clear, simple terms? Is it that they have an agenda? Do you have a hidden agenda, Gustav?
Obviously not. Obviously not.
It was the same problem I expressed, though. I told you, I don't read. I just look at the money, go to the signature, I'm gone. But I see policy, something, I just ignore it.
You see, that is the problem I have with people who buy insurance. They enter our offices, and I don't know whether they feel intimidated by the beautiful environment, and as a result of that, they forget to ask us to explain, because it is our duty as insurers to explain some of these jargons to these clients, because at the point of claim, these jargons would be applied. For instance, when you come and you say you want motor insurance is supposed to indemnify you. What does indemnify mean? Indemnify simply means that I'm sending you back where you were before the accident. So if you have a 5-year-old vehicle and that vehicle is involved in an accident and it has to be written off, I'm supposed to get you a 5-year-old vehicle to replace, either replace, repair, or whatever. But at the end of the day, like for like, you shouldn't benefit from insurance. Now, one thing that you would definitely see in an insurance policy is either policy excess or the deductible.
Okay.
These, what we say is that when you buy insurance, don't think that because you have insurance, you're going to be careless. You get me? So you take the bends at 100 kilometers an hour or something. You get me? You need to be careful.
Yeah.
And one of the things that we have put in the contract to make you careful is the portion that you will have to bear.
Okay.
It's either 5% or 10% of the value of the claim when it comes to motor, or 15% for commercial this thing.
Yeah.
When it comes to fire and other policies, you see deductible. That's just the portion that you will have to bear. You understand? That's the portion of the claim you will have to bear. Maybe we will pay 90%, you pay 10% of the. These things need to be explained to you.
Okay.
You understand?
Okay.
Now,
Okay.
contribution. When an insurer asks you to contribute, what is just simply saying is that you have a 5-year-old vehicle. What it means is that the parts are 5 years old. You've been involved in an accident. that vehicle needs to be repaired.
Yeah.
Now, when I buy from Toyota, let's say I buy from Toyota or a dealership, I buy brand new parts, what it means is that you are going to be better off because those parts are brand new. You get me? But to set you back where you were, I need to get you 5-year-old parts. Maybe I can't get that from Abosokai. So I say, okay, fine. In view of the fact that you are going to be better off, just contribute a little, contribute a certain percentage to enable me send you back where you were before.
Okay.
You get me?
So that comes back to the 5% that you mentioned.
That is it,
Okay.
5% or 10% or whatever percentage per the terms and conditions of the policy. So once, I always say that once we have explained all these terms to you at the point of claim, and that is where the promise lies, you know what to expect.
Yeah.
And nobody will cry foul. So there's nothing hidden. Talk to us. we are there for you.
Okay.
Trust me, you are there for you.
All right. So Gustav is saying that we should talk to them. When you go there, you just find him or find anybody else and ask the questions. But perhaps where they write the words is what we don't see. So maybe in the document, in bold font 24, font 24 and above, you write please note NB. Then you list 1. Then you explain. 2, you explain. Some of the fra paragraphs now, we don't see it.
Can I ask a genuine question?
No.
Before you start,
Gustav,
please.
no. You can't ask any question. Point, we are done. In the document, 1 page, please note, font must be above 24. Then you note number 1. This means that. It means when you do ABC, we will do this.
But we have it.
But where you write it, you mix it in a lot of sentences and then they don't see it.
If you don't open the policy, where will you find those?
The writings have plenty. Ima, let's come back to the life, the life insurance. We need to understand, you know, what really does the life insurance mean. I mean, for the family, for health.
Okay.
We keep hearing life. Yeah. Some people even call it assurance. I don't know whether it's correct to say that, but what does it really mean?
Okay, so life insurance basically started from a point where it sees the person taking the policy as one who is the income earner for the family. You bring food to the table. So life insurance is saying that what will happen to the people who depend on the food you bring to the table in case you depart?
Okay.
Okay, so I am a worker. When I go to work, I earn incomes. Because of that, I supply food to the home. Someday, if life is so unfair to me and I leave, I die, what will happen to those who depend on me to survive? That is where it started from. So basically, what life insurance is seeking for you to do is that insure your life as the individual who is the breadwinner. So you insure your life such that in case you depart, the family will still be where they were as though you were there. Let me give you a very practical example. So at the end of the month, as a husband of a home, I give my wife 1,000 Ghana cedis for homekeeping for 1 month. So every month, so long as I am working, my wife is sure that I'll give 1,000. What happens if I die? Means that 1,000 is off the space.
Gone, yeah.
Once the 1,000 is off the space, standard of living will change. Unless my wife is able to replace the 1,000 from some other source. If she's unable to replace it, standard of living in the home will have to go down.
Yeah.
So as a family man, if I give 1,000 a month, can you imagine if I go to an insurance company and I insure my life for 60,000? 60,000 divided by whatever it is translates to about 5 years. Because 1,000 a month, 1 year is 12,000.
Yeah.
So if I go and insure my life for 60,000, what it means is that 1,000 I have been given to my spouse can continue for the next 5 years. And it's enough a time for her to adjust and find alternative means of livelihood. Then I have not made that provision and all of a sudden I leave the scene. And now she has to struggle to try and make up for the 1,000 and how it can affect the children and everything. Now, over time, it evolved. So beyond me as the income earner having to provide for the family and so ensuring my life, I should also look at that dimension of the people who depend on me in case they also pass on. Because they already depending on me, if they pass on, it's still my responsibility to ensure that I lay them to rest. Funeral is not cheap. And once it comes, it means it's going to make me financially worse off. So what the insurance people are saying is that those lives who are also depending on you, make sure you insure their lives. So in case someday they also pass, the money that you will need to bury them will also be provided by the insurance company. I always tell people, if you're a firstborn son, you should know that in future, if old man decides to say goodbye, and it is you they will call upon.
Of course.
In fact, if you are a son in the family, or a daughter in the family, and at the end of the month, your mother always calls you to survive for the next month, you should know that the day she also says goodbye, it is you the same person they will call upon. What we're saying is that don't let these things hit you, and then you go and fall on your investments to go and take care of it. So life insurance just helps you to take care of those things. Beyond death issues, life insurance is also able to help you to do savings for the future. Now, how does it differ from what you go to a normal investment outlet to do? That's what I'll show you now. There are certain policies we call the endowment policies. And there are another set of policies we call the universal linked policies. Now, to break it down, an endowment policy is saying that you can walk to an insurance company and tell them, because I anticipate that my daughter will be going to the university in the next 5 years, I think in the next 5 years I'll have a need of about 30,000. Now tell me how much money I should pay you every month, such that 5 years time, when I come to you, I'll get 30,000. The insurance company will tell you a definite amount that you will pay flat every month. It won't increase. But the assurance is that once you are paying that amount religiously, in 5 years, your 30,000 is guaranteed. However, if unfortunately you pass on before the 5 years is due, let's say you started this nice idea of securing your daughter's future, 2 years down the line, you die. You haven't reached the 5 years, but the insurance company will still make available the 30,000 in the contract, though you haven't contributed to merit it. Now, if I had taken my money to any ordinary investment outlet and I had contributed 2 years, what the outlet will pay is my total contribution as at 2 years plus the investment returns, which will not be equal to the money I was targeting. So that's the difference between what insurers will do and what a normal investment outlet. So if people tell you, insurance people, they also tell you the investment, but they don't give returns like if I had taken my money elsewhere. What they don't know is that it takes time for you to reach the destination. But in the intervening space, there could be trouble. You want to move from 1,000 a month to 50,000 Ghana cedis in a matter of 10 years. That 10 years is not guaranteed. It's only God who knows what will happen within the 10 years. So if the purpose of you moving to 50,000 is to secure your daughter's future, that 10 years is not guaranteed. So I give a practical example. If I have a daughter who is 12 years old, perhaps it's JHS2 or something, that daughter to move to SHS, move to university, and get to a place of independence, it will take about the next 13 years. Now, 13 years of that daughter's life is dependent on me as a father. So long as I am alive, I will do whatever it takes to make sure my daughter hits that 13 years. But if death occurs, her 13 years is not guaranteed. And it is the 13 years that she will come to a point of independence. So imagine I die in the 6th year. It means 7 years more to the point of independence, she is trapped. And that is when you see some people fall in all kinds of vices, trying to survive, just because the person who is supposed to take them to the destination is off the scene. But if, thank God, I was able to live 13 years, and then my daughter hits that age of independence, my peace of mind is secured because she can continue life in my absence. So that is what people normally fail to see. So I want to go and invest. Insurance is not an option, but there is a destination you are going to reach, and it will take you some number of years. It's just not a day's flight. It's not an instant flight from 1,000 to 50,000 or 70,000. It will take you time. So whilst you are traveling gradually to that destination, make sure that you have put in place cushions such that in case the disaster happens, you will land on a soft cushion, and then the family is still secure. So that is what life insurance basically is seeking to do.
Okay, that's quite clear. Before I move to Gustav, I was going to ask you how different is this when it comes to, general insurance. I need to understand what general insurance really is. But before that, this is coming from Ohiniwa. Ohiniwa says, great topic. I insured my parents 2 years ago, and And recently, I covered my dad on a different package,
Yeah.
on a funeral policy. Unfortunately, I lost my dad after paying for 2 months
Oh,
premium.
yeah.
All my sum assured was paid to me. For me, insurance has really helped me.
Great.
Well, I guess
Great.
this is something to
Great.
buttress the point
Great.
I've been trying
Can
to
I
make.
say something before you
Please
continue?
go ahead.
Gustav says something. You can benefit from insurance. It's restricted to general.
Okay.
I want to make that one clear. You know, there isn't, and I may sound cynical, but sometimes you have to let people know.
Of course.
There is not a limit to which you can insure a human life.
Yeah.
There's a limit to which you can insure a property because you can value the
It
property.
even comes with a defined cost.
Exactly.
Yes.
Human life, you can't value it.
Yeah.
So if I come to your company, I want to insure my father for 50,000. You say you can't give me 50,000. How much can you give me? You can give me 20,000. I'll take 20. I go to the next company. I want to insure my father for 30,000. You have it. They say that I can give it. I add the 30. If I have money to take 10 insurance policies on my father's life, all the insurance companies will have to pay the day my father says goodbye. So assuming I have insured my father to a tune of 150,000, and then my father dies, and all I need to bury him is 20,000, who would I give the 130 to?
A lot of profit for us to
Exactly.
chop. Lots of
So,
chop
so when
money.
it comes to life insurance, indeed you can benefit. It may sound cynical, but that's the reality.
Yeah.
So
Yeah.
you could see somebody doing a lot of what we call local balance show or a show at a funeral. He's lost an in-law.
You may never know.
You may never know. You may never know. The guy might have been running on about 4 policies, and the 4 policies does some 20,000 claim. He lands at the funeral. He's dropping some 5,000, and the family is hailing him. But it's all from insurance. And this thing that I said is a practical example I'm citing. That somebody insured an in-law. The day the father died, when they called the first meeting, at the meeting he dropped the first 5,000. That this is what I'm using to support from the initial stage. The funeral itself, the gentleman came in, he brought his own drinks, own caterer and everything. You know accounts. Oh, what's he? As a corner for your baba you know. So that is what insurance can do. It gives you absolute peace of mind. So that is what I just wanted to add to it.
Nice one. But you know, what all that you've said, it kind of makes me feel like it builds up a misconception about insurance, especially talking about making it feel like insurance is for the rich, you know.
Okay.
So then it makes me, because apart from this, I've heard it elsewhere severally, that insurance is for the rich, those who can afford. And the people try to relate it to our current situation, you know, for a worker like me or a beginner like me, who is this, who is that, I'm not earning much and all that. It's insurance for me. What kind of insurance can I do? Is it right to say that insurance is for the rich?
I don't think so. I don't think insurance is for the rich, because at the end of the day, whatever you have, you value whatever you have, and the premium you'll be charged will be based on the value of your asset. You get me? For me, I always say that I think insurance should rather be for, I wouldn't say poor, but for the prudent.
Okay.
You get me? And the prudent could be a rich person or a poor person. Because if you know the value of insurance, then you stand to gain, because at the end of the day, when the unfortunate happens, for instance, you have a 1-bedroom house valued at 10,000 Ghana cedis.
Yeah.
You know something? I have a brochure here which says that for, let's say, content value. Content, we're talking about your TV, your air conditioners, personal property. If you have 10,000 worth of that, just pay 35 Ghana cedis to secure these.
In fact, you didn't add that as a year. Add
a
that
year.
one.
Annual.
Hold on.
Yes, every
35
year.
cities, and I go and sleep the whole year.
Yeah.
You go and sleep the whole year.
Interesting.
Should there be flooding
mine
in your
here?
house? Sorry?
I want to pay mine now.
Oh, we'll show
Don't
you the
worry,
way.
before I leave,
We'll show
I will make sure
We'll
I
show
have
you.
that
Okay.
in my pocket. Yeah? There's flooding, explosion, impact, any damage to your items.
Yeah.
You stand to get back, what, 10,000 Ghana cedis. So long as you can prove that the items are worth that. You get me? So I don't think insurance
we
is
designed some policies for the SMEs, small and medium enterprises in Hollard.
Okay.
You won't believe that. And small and medium enterprise means you are a whole company.
Yeah.
You can pay a premium as low as 450 Ghana cedis for a whole year for a company. And it comes with multiple covers for the workers. It comes with the property and everything. And we have a policy we call Adepa Ofie.
Adepa Ofie.
Adepa Ofie. Adepa Ofie is one of the policies where with as low as 27 Ghana cedis a month, you can take a policy.
Wow.
Now, Adepa Ofie is saying that if you pay the 27 Ghana cedis, it will cover yourself, your spouse, and it will cover 5 children for free. In fact, when you cover 27, it gives you cover yourself, your spouse, 5 children for free. And then what it means also is that if death occurs, let's say the main life loses his life, after paying the claim, every single premium you contributed, all will be returned to you. You know, or the beneficiaries that you've left behind. That is how cheap it is. And we have insurances which can give you cover up to 100,000 and beyond.
Interesting.
And that will give you a lot of security. And it's not expensive at all.
At all.
It's not expensive.
So
in fact,
it doesn't matter who is poor, who is rich. Anybody
largely you
has to be
determine your benefits.
Okay.
So if you go for higher benefits, then it's like you are venturing into higher premium areas. But your pocket can be accommodated.
Okay.
Whatever it is that you have, if you talk to an insurance advisor and we do the analysis, we surely can give you a premium that you can afford. And some cover is better than no cover.
All right, so some cover is better than no cover. I'm going to go on my very, very, very last break, and then when we are back, we'll take the very last shot, and then we can wrap up. Okay. Please stay tuned. Come back if you're just joining us. We are still in the lounge. I'm still here with Emmanuel and then Gustav. Guys, there's something I want to know. Hollard. Okay, Hollard. What products do you have? What products do you have as Hollard? Insurance, yes, but what products specifically do you have?
Okay. Hollard does a range of products. We have motor insurance.
Okay.
Under motor, you have third-party property damage insurance, third-party fire and theft, comprehensive insurance. We do fire. You have fire and allied perils, which is an insurance which covers your building and your contents as well.
Okay.
Against, let's say, flood, impact, whatever. Then you have travel insurance policy. We issue travel insurance policy that protects you against the unfortunate that may happen whilst you are abroad. We have we have the corporate lines as well,
okay,
where you have fleet. We do fleet business, motor fleet business. We do workmen's compensation.
Okay.
Group personal accident policies. We do marine hull and marine cargo insurance.
That's quite a lot.
Yes,
Yeah.
we do quite a lot. But I just want to touch on motor and home products. The motor, because we have this very good benefit, which is the roadside assistance. That when you secure a motor insurance policy with us for that year, you can, when just in case you're driving and you face any issue and you have to stop and you need assistance by the roadside, you can always call Hollard, and Hollard will send somebody within 30 minutes. Assistance will come.
Okay.
So they'll repair your tire. If 1 gallon you've lost, they'll buy you petrol with your own money, not ours. You get me?
Well, it's still a service, so I think it's fine.
A benefit. It's a benefit. I think we need to, for which we need to buy motor insurance. And then when we come to home and contents, listen, we all have bought homes, we have our content, we spent a lot of money to spec our houses. We need to insure these items. So basically, we have a comprehensive home insurance which covers you against flood, the normal allied perils, and then you have what do you call it? You have fire. You have burglary. Yeah. You have even your how do you call these your workforce in your home.
Yeah.
We have a cover for them.
I mean, it obviously
As
means
well.
that beyond just trying to provide security, you need that, other form of
Other
security
form.
for the things
Because
that you
it
have at
is
home, right?
only that will replace the
Those
items.
things, yeah.
Your dogs can be poisoned, they'll die. Security fences are always cut. Yeah, security fences,
Gustav.
but insurance will pay
Is that
you.
we're talking about dogs, though?
Yes, yes.
Ivano,
Yeah, and I mean, just for the home, the only way you can, I mean, one of the ways you can pick the home insurance, contact. I'll give
Yeah.
you a contact. And it's a lady we call Araba.
Araba.
Yes.
So
you
we should
can
call Araba.
Call Araba.
What is Araba's
Araba,
number?
Araba,
Oh, okay.
just WhatsApp
It's
Araba.
there.
Araba is 0242 426 412.
Yeah.
0242 426 412. If you just say hi, Araba can help you to pick a home insurance policy.
All right, so
Absolutely.
just say hi to Araba, and then you have the policy in your home, and you start paying your premium. Said the right is
Yes.
premium, right?
Yeah, premium.
Thank you very much for being part of the show. A big thanks to Emmanuel and then Gustav for joining us today. I think we would have to come back to give you more information on this. Thanks to Casapre for Alomo Bitters for making this show possible. Also, a big thank you to Promasidor for also being part of this show. Next week, we are going to bring you another exciting one. And then a brand new segment that we call the $1 Million Question. Next week, we'll tell you all about it. Please stay blessed. Stay out of trouble. We'll see you next week. Stay tuned.